Hello everyone, this is Jason Kendall with SFS Wealth Management with a March 2015 Educational Economic Update. In this month's video, we'll talk about some of the major economic events that occurred last month and give you some insight in what they may mean to you as an investor. Also, please stay tuned at the end for my required disclosure statements. The Federal Reserve and interest rates dominated economic headlines last month. To support the economy, the Fed has kept interest rates at historically low levels since 2008. Since bond buying operations ended last October, the next step will be slowly start raising interest rates to quote-unquote normal levels to prevent inflation from getting out of hand. After the March Open Market Committee, Fed Chair Janet Yellen announced that the Fed is moving away from a patient interest rate policy and will start thinking about raising rates this year. Though we don't have a date yet, many analysts think that rate hikes could come as early as mid-June. Though investors are getting nervous about higher interest rates, we know that the Fed will move carefully to avoid damaging the economy. Speaking of the economy, we also got a look into the final fourth quarter gross domestic product reading, which showed that the economy cooled in the last 3 months of 2014, growing just 2.2%. This brings overall 2014 economic growth to 2.4%, which is up from the 2.2% in 2013. Investors care about GDP because it's a most comprehensive economic scorecard and shows us at a glance how the economy is doing. Though the relationship isn't simple, healthy economic growth generally translates into strong corporate profits. All else being equal, strong profits usually boost markets. Digging deeper into the data, we see that strong consumer spending, exports, and business investment supported the economy. The growth rate decreases because of higher imports and lower federal government spending. To translate all this into plain English for you, the economy was fundamentally on very stable footing at the end of the year. Though we don't have first quarter GDP numbers yet, clearly the Fed feels comfortable enough about the economy to think about taking away the training wheels. Looking ahead at the first quarter ends, investors will turn their attention to corporate earnings reports to find out how U.S. companies performed. Right now, overall expectations are lower because of weak overseas demand, low oil prices, and a cold winter. Since leadership teams like to underpromise and overdeliver, we can hope for some positive earnings surprises. We'll know more in the coming weeks. That's it for March 2014 Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, please give us a call. Once again, this is Jason Kendall with SFS Wealth Management signing off for the month of March 2015. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 765-453-3355. We'd be happy to talk with you. As for my required disclosure statement, while we do believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Thanks a lot.